want an exposure to a market or an
Everything they need in one place.
The world's foremost authority on individuals, advisors and institutions.
Hello and welcome to Morningstar TV. I'm Emma Wall and I'm here with Dean Tenerelli of the T. Rowe Price European Equity Fund. Hello, Dean.
Hello, good morning.
So you're here to tell me your three stock picks.
I am.
Far away.
Okay. I picked two actually in Spain for today, representing the fact that I have 15% of my fund in Spain. I think they're great opportunities, and over the years I found that often, where the thick of the crisis is where there often presents the greatest opportunities. So the first one will be the Spanish Stock Exchange, which is called Bolsas y Mercados, or BME. Simply the Spanish Stock Exchange, which is mostly equities, trading on 12, 13 times PE. Huge EBITDA margins, greater than 80% EBITDA, 82% EBITDA margins actually. Generates a lot of cash, doesn't require a lot of capital expenditure to run the business. The biggest risk is competitive exchanges, which we've seen gaining share in different markets. The biggest one being Chi-X, and the most well-known one. BME has been very competitive and very well run, so that the alternative exchanges have actually taken very little market share over the years that they've been trying to enter the market. It stands now at about 14% and was about 4% a couple years ago. So BME is very effective with their pricing strategy to fend off competition. The interesting part is it trades on a 7% dividend yield, which, if you think about what you're getting in your bond investments, is very attractive, and also shows how cheap equity markets are, especially in Southern Europe, and a great opportunity. And it trades, it has net cash, so there's very little risk to that dividend. And also, it is very cyclically depressed, so the PE multiples I'm giving you, which are 12, 13, which are reasonable, are on volumes which are down 70% from the peak. So the interesting thing is, as volumes start to recover in the market and people go back to investing in Spanish equities, this company will ride the benefit of that and have good earnings growth over the next few years and generate a lot more cash to be able to pay the dividend out. So I think it's a great story, and is a large position in my fund.
And your second Spanish stock?
My second Spanish stock is a television station, actually. There has been great consolidation in the media sector in Spain because advertising revenues have fallen so dramatically due to the crisis. There were 4 free-to-air stations which have been merged into 2 free-to-air stations. All of the public stations no longer take advertising and have had their budgets cut and content budgets cut dramatically because of the crisis. So there are only 2 places in Spain on television to advertise now if you're a large multinational that want to get your product and brand put across to the Spanish consumer. And so in old-fashioned terms, we call that a duopoly, which tend to lead to very favorable pricing and very favorable business conditions. At present, however, the P&L doesn't look that great, and the companies aren't doing that well because advertising has fallen so dramatically. But as that starts to recover, which it already has signs that it's stabilized and is starting to bounce off the bottom, I expect the margins to expand in this company dramatically and earnings to double subsequently for the next few years. So we're talking about a company which will dramatically increase its earnings, is again net cash, has a very healthy balance sheet, so no risk on financing whatsoever. And we estimate that at sort of a mid-cycle multiple, this company is still trading on 5 times PE, even if it's had a decent run this year. So I think it's sort of a company that will unfold and have very strong earnings growth over the next several years that investors can ride that growth and stock appreciation.
And its name again?
Mediaset España.
And your third stock pick?
My third stock pick is actually a financial. And I chose that because financials also in my fund have great representation of overweight financials. I think that they are and will be a big driver of equity performance going forward. In general, they're trading at discounts to book value, significant discounts to book value in many cases. And as the economy recovers, provisions decline, interest rates go up, allowing them to make more margin on net interest on the top line, net interest margin, and commissions come back as we all start to get more active in the markets. They're going to have a good earnings power and earnings growth over the next few years. The one in particular I've chosen is São Paulo Intesa, which is an Italian bank trading at 0.5 times its book value, and we estimate will make its cost of capital and ROE next year at 9% ROE. So I have little understanding why a bank that's going to make its cost of capital trades at a discount of 50% to its book value. So I think that valuation will normalize and probably quite quickly. Banca Intesa is the most conservative Italian bank, a well-run entity, flat costs for years, very effective, very conservative management. Right now is suffering from a low interest rate environment, which doesn't let them make a great spread on their banking business, and also a lack of commissions, which we all have lived through and understand. All of that will normalize, and
will it be a volatile sort of normalization?
I don't even think. I think evidence shows now that provisions are starting to come down in Italy. They haven't had a great provision cycle. There hasn't been a real estate crisis in Italy. Italians have a lot of cash personally. There's not a lot of personal debt in Italy. SME sector has been hit somewhat, but SMEs in Italy are competitive. So I think it's going to be a quite gradual but purposeful recovery. And so I don't think there's risk of great volatility, even with the stock.
But all three are sort of a longer growth story.
Longer growth story, a slow grind, slower recovery, but at 0.5 times book, there's a lot to go for. So I think it's quite interesting.
Dean, thank you very much.
Thank you.
This is Emma Wall from Morningstar TV. Thank you for watching.